Boom, we are pre-recorded today, ladies and gentlemen. Yes, that's right. We're going to try something new. Instead of going live, we're just going to give you these short updates. And maybe once a week we'll do a live video so we can touch base with you. But today we're going to be taking a look at Bitcoin, the overall market here, S&P 500. Just take a quick gander before the week closes out here. So let's dive right in. Boom. Bitcoin on the 1 hour. Been following this trading range for approximately 50 days from the selling climax to this moment. 58 days, almost at exactly 2 months. One of the fun parts about this is, well, we always get to learn. Now, if we remove some of our drawings here, it doesn't look good. Now, I want to give a huge shout out to Glasswalker, one of our private members. We've been following one of the charts that he created over redistribution. Now, everyone thinks that it's accumulation. And look, I'm a huge fan of accumulation because it means that there's a bull market coming. But generally, good accumulations take months to years. Years are the even better versions because they last so much longer. But in these short time frames, what you do get is reaccumulation. And there's reaccumulation after decline. This is another potential argument that we've made. But it doesn't look good yet. And as you can see, it's actually followed quite nicely. And we're down near the bottom of the trading range and effectively in a spot that doesn't look super healthy. Now, the downside potential is actually a positive. So this is one of the most interesting aspects, I think, that most new investors get wrong. When you see the price go lower, you should think, awesome. Here's a chance to accumulate an asset that I find valuable at a cheaper price within my monthly kind of buy and continue to accumulate position. So one of the fun parts about this consistency is that when you go back and you look at the macro strategy, which we try to go over all the time, if you had just considered yourself an investor and you bought at any given moment, throughout time, you end up doing really well. And this actually works for decades and decades of history that we have the S&P 500 and other assets. Now, Bitcoin could fail, right? It could come down to zero. It's a possibility, unlikely, but possibility. And what you want to do when you're beginning as an investor is get your emotional dialogue out of the way. I just spent about 40 minutes doing yoga and meditating, and it's a really great way to clear your mind, focus on what's valuable, and understand that every day the markets are going to be choppy. There's going to be crap and market news, which I consider noise, going on, and you fundamentally could basically ignore all of it. You could have ignored everything in the market news sector, and it was very easy to find the spring. And to some degree, actually, now that I look back, this is a really important moment. Actually, when I have to go over this. No matter how much money I've had, I just don't spend it on stuff. It's not really my favorite thing to do. I like to build ideas. I like to build stuff. So I guess that's a stuff, but I don't like to spend it on, I'm not buying Gucci clothes, Rolex watches, or some fucking, maybe I'll buy a BMW. I'm not sure. Be a nice car to have here in the jungle. But because of that, I don't really get euphoric with my money. Like when we have a big market cycle up, I'm not like, oh my God, I got so much money I'm gonna spend. I'm gonna buy a fucking Lamborghini. I'm gonna buy a new house. It's just not what interests me. Anyways, so it was actually quite difficult for me to recognize some of the points that we were at an intermediary top. For instance, this is the moment up here where Richard Hart was putting diamond encrusted Rolex watches on the spinny wheel board. That's a signal of a top. We were having Dogecoin millionaires. That's a signal of a top. A Shiba Inu token, that's a sign of a top, right? So these euphoric moments in market sentiments, I'm not actually super connected to. Everybody felt the pandemic. I don't spend my money on silly stuff, so I didn't feel it. So now what I do is I watch other people and how other people are spending their money, because it just makes more sense. If I'm not going to do it and they're doing it, it's very obvious that they're doing it, and that should be the time when we can tell that the market is a little overheated and quite high. Anyways, back to the charts here. We're going to roll through the VIX, the volatility index, keeping tight right now, although having a hard time pushing any lower. We're just not finding a comfortable state here. Delta variants, lockdown, blah, 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 stuff I don't really care to think about. We have not settled down in the volatility range. As a matter of fact, we have not gone lower than the previous highs in the years prior. So at least in our normal year, like through May 2019, August 2019, some I think this is when a plane got shot down in Iran, something like that, right? So we see these spikes of volatility in the regular cycle, but where those spikes are, those highs are our new lows, basically. So we have a higher low for volatility in pretty much everything we do. So we'll have to keep that in mind. Okay, so the NASDAQ has started to finally roll over, and this is going to be a really hyper important part of the conversation. Is through this process, do we find that we are now at a top? Or do we get a bounce, a reaccumulation, and then a break off? Because we've seen these happen before. We've seen the rising gradient bottoms actually break to the upside in the trading range. So we're going to want to watch both the S&P and the NASDAQ very closely. Here we can see, again, this could very easily become an upthrust after distribution. And we see some of the characteristics that would potentially put us there. Number one, there are no huge buying signatures within this trading range. And the previous down cycle, it was actually a fairly limited amount of supply that pushed us down. So where we are right now in the S&P 500, we're going to want to really keep a really close eye on, because this is phase C, effectively. Phase C to phase D. These two together can be a little confusing to which one's which until they complete. So now that we know we're in approximately phase C for the S&P 500, could this be an upthrust and distribution? And could this likely roll over the rest of the Bitcoin market to come and bring us back down at around 390? It's a very high possibility. One of the things we'll start to do a little bit more is check into the macro story, but we've had some earnings reports come out. Inflation has started to drop. Again, we're having this inflation versus deflationary battle right now. So we don't know yet. Again, I've said this multiple times. If we go back out to the daily since 2016, or maybe even the weekly here, since 2016, what's happened? Oh no. Okay. Well, that's hyper strange. I guess it's not loading right now. Okay, let's try this out again. We'll go to the right-hand side of the screen. We're going to load up the S&P 500, ladies and gentlemen. We're going to try this one more time. Okay, it's not showing us any love. Well, I don't want to redo today's video, but since 2016, I've been standing by the assertion that we're basically going to have a market cycle up only moment, because they have no choice but to just print money, and we've seen that all along the watchtower. So even though Bitcoin could have a temporary cycle down, come as low as maybe even $16,000 to $17,000, it's very unlikely it will last that long. And fundamentally, it actually could end up being a spring. And this is one of the very difficult things about trading ranges, that you have to understand these function on a scale invariant format. If you do not know what that means, I suggest you do your homework and study, because it makes all the difference in understanding that you can zoom into and out of a chart and find these trading ranges on every cycle. But I want to give, again, a huge shout out to Glasswalker. This does look like what we're following. And it does look like we see that dip below, and we do see redistribution. So thanks, Glasswalker, for keeping us up to date on this one. Hey, and yeah, we'll leave it at that. We are in the bomb shelter today, so take a look at this. We moved into the new house, which is a cool bomb shelter. So we're going to be taking you through on a vlog that should be up maybe this evening. Anyways, we're going to leave it at that. If you like this content, give us a thumbs up. It's shorter, it's more succinct. We'll try to do these from now on. And we'll upload them, and we'll maybe do a live video like once a week on Fridays or something, so we can actually chat with you guys. Leave your thoughts, your comments, your questions down below. Give us the thumbs up if you enjoy this content. Follow us on the social media channels everywhere. Hit that notification bell, ladies and gentlemen, because sometimes when we've been posting videos, you guys haven't been getting notified. So go back to the channel, go to Arcane Bear in YouTube, where you are right now, and be sure to hit that notification bell. That way, when we do these videos, you will get instantly notified. There's some really important stuff coming up over the next 2 weeks. Our focus into venture capital has been accelerating. Our team has been growing, and I want to share that with you, but they're usually timely updates. For instance, Fever, we made our posts on July 7th. By July 13th, it was up 15x. That's less than 5 to 7 days. If you're dinking around with your time, you're going to miss the trains. And look, not all of them work. We've had failures in the past. Veritasium was a failure, right? But that's the point of venture capital investing. If you know how much you can lose, you limit that downside, you have an infinite room for upside. Same thing with Avalanche. You know, Avalanche could have been a failure, but it wasn't. Yay, it went like 35x or something from those early days. So yes, that's how we want that to go. And it makes up for all of the times we were wrong. Hyper important to understand that. I can't stress that enough. Anyways, thank you guys for joining us today. This is T with the Arcane Bear.